Welcome to another Maine SBDC webinar. My name is Kelsey Reardon, and I am with the state office hosted by USM. And we are very lucky today to be joined by both Maine SBDC at CEI Business Advisor Ann McAlhany, as well as the Carver Memorial Library in Searsport. So with our powers combined, we have put together today's lunchtime presentation about where the money is hiding. So if you're looking to fund a business, we're gonna explain the different avenues for finding that, different resources that are available throughout Maine and in general. We are the Maine Small Business Development Centers, if you are not familiar, and we are a federally funded program. So it's no cost to you, and all of our work is confidential, and we provide business advising for just about any small business question you could possibly have. And if we can't answer it for you, we can find someone who can. So we can't give legal advice or accounting advice, but we can certainly connect you with people who can. And we provide that one-on-one counseling. We have a lovely lineup of live webinars that we've been offering based on us all living on Zoom these days. We also have a new digital e-learning platform. So we deep dive into some of the more complex topics. So once you figure out where you want to get your money from, we have some financial statement e-courses, some additional building blocks as you move through the steps. Today, we would love if you would use the chat feature to introduce yourself, maybe let us know where in the state you are or what industry you are looking to get into. Also, any questions you have along the way, feel free to type them into the chat. If we don't hit on them as we go along, there will be plenty of time at the end for Anne to go through all of those questions. So feel free to stick them in there while you think of them so you don't forget. We are recording today's session, and we publish our recordings on YouTube. So I will send out a link later this afternoon with the slides and the presentation, as well as some other resources we may hit on, and a link to the recording. So if you have to leave early, don't worry, you'll be able to rewind and pick it back up where you're at. Otherwise, I think that we are all set to get started. So I will pass it over to Sue at the Carver Library to introduce our partner.
Hello, I'm Sue. I'm the director at Carver Library in Searsport, and we started this series as part of our mission to help reach out to the businesses in Searsport, but also across the state. And I'm really happy that we have so many people from so many places, which is really nice. So it's just something that's on our list of let's do business development. So that's what this series is about for us. And if you're not local to Searsport, your local library can also help you with whatever research or materials that you need to find, or internet connectivity, or whatever it is that you need. So don't forget to reach out to your local libraries as well. That's it from me, I think.
Awesome. We will always take a plug for your local library. So yes, definitely reach out to your local library, see what kind of offerings they have, and that research is crucial. So our business advisors actually also provide research and market research specifically, and I'm sure that Anne would love to talk about that at some point as well. But for now, we'll pass it over to Anne to get started talking about financing.
Good noontime all, and certainly thank you to Sue for the introduction. And again, a shout out to the Carver Library, who by these workshops has a little bit larger reach than they might normally, but definitely kudos to Sue for nudging and if you will, instigating this series, which we hope you find helpful. a question I often get asked, where's the money? I need money for my business. So let's chat about where we might find funding for a small business. Whoops. But my slides aren't moving. Hold on. There it is. Okay, that one. Let me just, okay, got it. I'm Ann McAlhany, and as Kelsey said, funding comes to us from several different sources, partly from the SBA, which is federal funds, some from the state funds, some from local funds. But the short story is that funding all lands with us individually at some economic development agency who hosts each business advisor. And therefore, for instance, my email address is not any federal email address, but it's ceimaine.org. My colleague Christina is joining us, and she's with AVCOG, which is Androscoggin Valley Council of Government. So we have a little bit of a mixed pedigree, but as Kelsey said, we're here to serve business, either businesses owners, either aspiring or existing businesses. She gave you some of the highlights. We work with clients over a broad range of topics. Sometimes I'll say, I think of my job as helping business owners or aspiring business owners take their business plans, their hopes and dreams, and make them into an actionable reality. It often has to do with business plans, projections, startup businesses, those exiting their business or selling it, financial analysis, and some of those other things. And I'll conclude by saying, I've also discovered that sometimes the assistance that we as business advisors offer is actually not something what seems so concrete, but it's maybe just having a listening ear to talk to, someone who you can explain your ideas to, we can mirror that back to and help you make more sound decisions. And also, because we're not family or friends, we've become a safe place to talk about business ideas. Who am I? Just in brief, I'm a business advisor here I'm actually in the Bangor office. That's where I've been assigned, working here for about 15 years now. And my background is food service, the food world, and a little bit with warehousing, inventory management. But those have given me an ability to talk with a wide range of clients, because we're all, even though we have our own special backgrounds, we're all generalists, and we bring what we've learned from clients that stays confidential, but it becomes a body of information that we can share with the business owners that we talk with. Today, what I hope you'll come away with is knowing a little bit more about what are the sources of business funding, what fits my needs, or what kind of things do I need to look at to decide if this particular source of funding fits my needs, and how do I prepare to have some of that money come into my business. And then at the end, we'll share a few tools or resources, and that'll be a part of what Kelsey will send out at the end of our when our workshop's concluded. As she said, I'll plan to talk until about 12:30 in case people are on lunch hours, and then we'll take more time. I'll certainly be here for Q&A. To go into more details. As I mentioned, I'm pretty sure, I think I saw my colleague Christina Ramsdale has joined us. She's graciously accepted an invitation to jump in here, and particularly with the Q&A at the end. She's a former lender, so she can certainly speak specifically to the bank lending process, and I'll tee up that she's got a workshop coming up, I think, next week. But let's jump in, because I know we don't have tons of time here. Sources of funding for a business. To me, we are talking about cash into a business, because that's the medium by which most businesses operate, is really that cash is the currency that runs through our business and helps us operate. But that funding can come from, really, one of the sources of funding is it comes from us. And the alternate source of funds into our business is from someone else. So money comes either from us or from somebody else. Seems pretty basic, but let's drill down into the differences between those two and what you might need to think about for your sources of funding. Money comes from us in one way, is certainly it comes from our piggy banks, right? It comes from money we've saved up, or sometimes that money is from a separate job that helps to fund our startup, our business, either startup or existing. Another source of funding, especially for if you're an existing businesses, is the money that flows in through our cash registers. Money comes into our business because of our business operations. We have expenses, but hopefully there's a little bit of money left over at the end of the month, if you will. And that cash flow from operations becomes another source of funding. Cash flow from operations funds our day-to-day business, but also as it adds up, then it can fund other capital purchases or bigger projects or growth of a business. But revenue from cash flow from operations is one source of funding for a business that we have control over. The third source that's really internal funding, if you will, for business is selling assets. We sometimes forget that some businesses have assets, things that are tangible. If you're a consulting business, maybe not, or service-driven business, but some are more product or even service businesses can have assets that they can sell off. Could be I'm a landscaping company or an earth-moving company. I've got a bulldozer sitting in the back 40 that I really haven't been using. I've been holding on to it because I thought I might need it, but I really don't. So I can sell off that asset, or maybe an extra truck or some extra tools or other types of assets in a business can be sold to free up cash to operate a business or to grow a business. But while that's one source of funds, that's not the only one. And oftentimes we look for external sources of funding for our business. And when I think about money coming from somewhere else outside of us, one of the first places it can come from is what we think of as family and friends. Or quite frankly, sometimes it's referred to, you might see the 3 F's, which is family, friends, and fools. Those people who are willing to support our business because they know us and they want to contribute to our business venture. Probably the most typical type of funding that we think of is banks. Institutional lenders or banks are a common source of funds for our business startup or growth. Remember that banks are highly regulated, and we'll get to that in a few more minutes, but banks are certainly one source of funding for our business. Just checking my notes to make sure I don't forget pieces. Yes, they have a certain regulatory environment that they work in, and policies and rules they have to go by. Another source of funding for businesses, what are often called in our world alternative lenders. They're non-bank lenders who have buckets of money that they can lend out, and they tend to be more mission driven. Some of the names that I think of here in the state of Maine would be in our greater Bangor area. It would be EMDC, Eastern Maine Development Corporation. As I said, a lot of these are economic development agencies. In the state, there's also the COGs. For instance, Christina's at AvCog, Androscoggin Valley Council of Governments. There's KVCOG, Kennebec Valley Council of Governments. In Southern Maine, there's the Southern Maine Finance Agency. The host of my program, my employer, CEI, is an economic development agency. They also have lending funds. Sometimes towns even will have pools of funds they've gotten for certain reasons that are, we think of them as RLF, revolving loan funds. So there's some other sources that are non-bank sources of loans that might be available to you or your business model. The other thing I think about, another source of funds, would be the crowdfunding. We hear about crowdfunding, which is oftentimes a way to tap small bits of money for a certain business launch or a business project, an identified project, and one solicits funding from external sources, maybe even people we don't even know, that usually it's through an online platform. There's multiple platforms out there. The two I think of the most would be Kickstarter or Indiegogo. You launch a project and solicit funds. Usually, I think most of them tend to be rewards based, it's not money you're going to be paying back, but crowdfunding is a source of funds for some. Quite frankly, I don't work with that type of funding too often, but it certainly is out there. Another source of funding that we hear about is angel funding. I don't have much money to put into my business. I don't have a great credit score, but I've got a great idea, and therefore I'm going to find an angel investor to help me start up my business. Unfortunately, that's probably not a scenario that's going to work. Angel investor is actually is not a generic term. It's actually a very specific term. An angel investor is a high net worth individual. So this is a very specific title. One has to qualify to be an angel investor. I think that something like $1 million in net worth or $250,000 a year in household income, so that there are people who have or deemed to have discretionary income or monies that they can afford to take a risk on. So angel investors are actually a very specific group of people. In Maine, there are the Maine Angels, and actually in Bangor, there's the Bangor Angels. So there are angel investors in the state of Maine, but again, we'll talk more about what kind of projects they look for later. I'll also note that there's also the venture funding. Maine has Maine Venture Fund. MTI does some funding of that sort. The host of my program has an affiliate organization called CEI Ventures. So there's some venture funds out there that tend to be for more riskier projects or things that have the capacity to grow. We'll drill down into some of these in a bit. And then lastly, there's the funds that don't have to be paid back. No repayment. Those are grants. Certainly, until 2 years ago, I seldom worked with grants because they're not nearly, the rumor about grants to me is much greater than the reality. Definitely during the pandemic, there's been a lot of money put into grants, but again, very specific purpose, tended to be pandemic related. You needed to be in business by a certain date, prove that you were impacted by the pandemic, things like that. But there are grants out there, and we'll talk again, drill down into a little bit more about where you might find those and some of the parameters around grants. Certainly fit is one of the important pieces for grants. As we drill down into more details, there's one rule to remember. Is there anybody online, maybe even Kelsey, if nobody chimes up, does anybody want to read rule number 1 to me? I've talked a lot. So what's rule number 1?
She who has the money makes the rules. And I love being in charge. I wish I had more money.
Yeah. So, but remember, funding has strings attached. Almost any of it has strings attached. And so you need to be aware of she who has the money or he who has the money makes the rules. Okay. Well, let's talk about bank lending a little bit. Again, I already mentioned that lenders are under a highly regulated environment. If you're going to the bank, and why is that? What's the source of money that banks are lending? It's that money that you and I have tucked into our savings account, or they're lending out that part of what's in my checking account that I haven't written checks for. So they're highly regulated. They have an obligation to not blow it, if you will, when they lend money. So there's a lot of rules that they have to follow in order to make sure that the loans they lend, the money they lend will get repaid. In other words, risk mitigation. Again, rule number 1, they've got the money, they make the rules. Sometimes we don't like the rules, but again, if we want money from a bank, there's certain rules that we need to follow or certain expectations they'll have for them to approve a loan to us. For instance, if I write a check or use my debit card and then suddenly it says there's no money there, I can't make that transaction, and I knew I had money in the bank, I wouldn't be very happy. That's why, because the bank had already loaned out all the money but not gotten it back. That wouldn't be a very good scenario. So they have certain rules that they apply, guidelines they use in order to mitigate risk. So they're more assured that the money they lend will get back. And there's these things called the C's of credit. I've seen 3, 5, 7, but here's a typical list of some of the top C's of credit. And I know it's probably pretty small on your screen, but we'll send it to you afterwards as well. C's of credit: cash in, cash out, and credit score, the top 3 that I think about. For one, cash in. Lenders don't like to be the only source of funds for your business venture or your startup or your growth. They want you to have some risk in the game, so they look to you to provide some cash in. I find that 0% financing is pretty hard to come by, pretty rare. But they also want to know that cash is going to come out of the business. Remember that risk mitigation line? They want to have some assurance or some comfort level that the loan can be repaid. Remember, they're not necessarily concerned how much or if you make a profit. Their main concern is, will I get my money back? Will I get my loan payments made? And that's the primary concern for a lender. One of the things they also look at it is credit score. That helps them look at how have you paid your bills in the past. So credit score is definitely a factor in a bank loan. Generally, I think of under 680 as being very problematic for a bank. I definitely encourage people to know your credit score if you're going to the bank for a loan. There's ways to find it out online anymore. If you have concerns about your credit score, there are credit counselors around. I know that, again, I'll refer again to the host of my program, CEI, has credit advisors who can do a soft pull. If you have questions, we can connect you. There's other CAP agencies that also, I believe, have credit advisors. But know your credit score before you go in. Collateral. Banks like to have something they can get their fingers into if the loan goes south. Is there something that could be sold off so they could recover some of their losses? Other things like capacity. What is your capacity to operate this business? Do you know these operations? I mean, what if I went to the bank and said, you know, I really think fixing cars must be an interesting problem to solve. I like solving problems. Now, how do I think I want to get some money to start up a car repair garage because I hear lots of people need their cars fixed. Well, you know, quite frankly, I've never changed my oil. I know where the dipstick is under the hood, but I've never changed my oil. So why would the bank want to lend money to me to start a car repair shop? Now, if I said, I've got a friend, brother-in-law, son-in-law, somebody else who's a really great mechanic. They're horrible with people, but I'm going to run the front of the house. I'm going to run the office because I'm good with numbers and booking calendars and keeping them on track and ordering parts. And they're going to actually, you know, they're really good at, got these credentials. They're going to be doing the fixing of the cars. Now I could probably sell that idea to a bank because I've figured out what the capacity is to operate that business. Lastly, another C of credit that's helpful to a lender is, I've got another job. I'm going to do this part-time, but I've got this source of income, or maybe it's household income. Somebody else in my household works enough to earn enough money to supply my household needs. So that if my business doesn't earn a lot of profit at the beginning, I still get to eat. So think about those C's of credit that are particularly important for lenders. Again, it's about they've got the money, they make the rules, and risk mitigation is one of their top priorities. Now, let's say you decided you're going to a bank for a loan. Things to think about, and we won't go into this too deeply, but there'll be a loan package. They need information from you, and their loan application typically has a checklist. Remember that first impressions do count. If they say, here's 6 things I need, and you only give them numbers 1 and 5, they're going to think you're not too prepared. And now they'll already be thinking, there'll be this subtle sense that, do you quite have your act together? So think about first impressions with your loan applications. Other things that they typically need will be a business plan, some sort of narrative that supports your idea, talks about it in words, and then CF as a cash flow projection, sense of money's coming in, money's going out, that leads them to believe in that line that we said, is there cash coming out of the business? How does cash flow in and out? And will there be enough in numbers form? Will there be enough money in the business to pay the debt, to make the loan payments? And then lastly, they'll, as a part of that application, need a personal financial statement, a PFS. So let's look at that quickly, because many people haven't paid attention to it. And I've worked with clients before and we sort of got hung up on the personal financial statement. Again, we'll send a copy to this, you can see it better, but there's 2 basic pages to it. This is an SBA form. Some banks have it embedded into their application, but the data is basically the same. There's a page that asks for your, contact information, but assets and liabilities. Basically, a personal financial statement is what I own and what I owe. You list the assets you have, from real estate to cars to money in the savings account, any other equipment, things of value that you might have. And against that, liabilities. What do I owe on my mortgage? If I've got a house, do I have credit card debt? Do I have car payments, other kind of payments? And at the end, are my assets worth more than my liabilities? And that's really the first page. Then it collects some more data. And then there's a second page that typically gives space to expand upon what you put on the first page. In other words, if I owe other people money, there's a space here to talk about to itemize those liabilities or notes to other people. Here in the middle, if you own real estate, there's an opportunity to talk about, here's what I paid for my house, here's what my mortgage is, here's how much I have left on the mortgage, things like that, to capture information regarding the assets and liabilities. Know that banks do care how much you owe to other people. That sometimes I've had loans not happen because they were uncomfortable with the business taking on more debt given the personal debt. So they do look at those kind of things. Let me check time. Okay, we are running tight on time, but I'll go quickly to talk about that was business loans, because that's where I see a lot of work with a lot of clients applying to institutional lenders. A couple of comments about that is sometimes clients will talk about an SBA loan. Well, just so you know, an SBA loan probably is a loan that you're not applying to, you're seldom applying to SBA for a loan unless it's a disaster loan. Otherwise, you're going to your traditional lender, and who's an approved SBA lender, and you're probably getting an SBA guarantee or SBA loan insurance. So you're still going to your traditional lender to get that kind of SBA guarantee that helps lenders be more comfortable with the risk. Other sources of funding, as we mentioned, all of those other sources of funding have eligibility requirements, just like a bank. There's this issue of fit. Does that source of funding fit my business model, or fit me and my growth needs, or what I'm trying to borrow money for? So uses of funds can be important. Oftentimes other funding sources have certain funding cycles. We can pretty much go to the bank today and at least start to talk to them about the process, but some other types of funding have certain cycles that we need to pay attention to. They might not be quite as responsive. Certainly other sources of funding have reporting requirements. Not that the bank doesn't. They'll want your tax return at the end of, the beginning of the new year. Sometimes they'll want quarterly statements from you once you get started or existing. And then remember that other funding sources can have tax implications. So let's jump in quickly. If you're getting money from someone else, families or friends, remember there's still strings attached. I encourage you to be very specific. Is it a gift? Is it a loan? Is it a patient loan? Do it in writing. Have something in writing that explains you're getting the money from someone, if it's family or friends, and what those terms and expectations of repayment or not repayment are. It can just help your life be better later on, because family dynamics can shift and they can change, and you don't want this to ruin the family dynamics. We've talked about some of what you need to get money from a lender. Alternative lenders, such as the CEIs or the COGs or the towns, will typically want some sort of business plan and projections. Remember, they're mission-driven lenders. They don't want to lend money they're not going to get back, but they also will look at other things, perhaps job creation, which banks like to hear you're creating jobs, but that's not necessarily the deciding factor. For an alternative lender, it could be job creation is one of their missions, and if they can help a business create jobs, that's important. So think about what is the mission behind that alternative lending source, and that can make a difference as whether you're eligible. Again, prepared, understanding the lender, their needs. Remember, they've got the money, they make the rules. So understand what their rules and their requirements or their expectations are. Crowdfunding, I won't talk about long. It's a different process, but again, you're putting forward an idea or a project, looking for little pieces of money from a diverse pool of contributors. If it's rewards based, then sometimes it's tiered. I want to do this project, and at certain levels of giving, you'll get a t-shirt, and certain other levels of giving, maybe it's a sticker. There's usually some sort of reward base, but it's really that you're tapping in with someone else who's on board with your particular idea or concept. And remember that presentation does matter. Typically, a video is involved that presents your idea, and to have that well thought out and polished does make a difference. It's helpful for you to get to your funding goals. As we mentioned, angel investors are very specific. They tend to look for some equity or some ownership in your company. They're looking for deals that will have the ability to grow. Oftentimes, a deal where I've got an idea or concept, maybe it takes a while to get that developed. I need some regulatory approval, FDA approval, things like that. But then once I get to that point, then I can grow the business very quickly. That tends to be the world angel investors work in. They know that many of the deals will not be successful. Therefore, they want a pretty high return on the back end, often expecting that the business will grow and then be sold to someone else. So you might be working yourself out of a job. With angel investors, your vocabulary changes a little bit. They'll want to talk about things like TAM, total addressable market, what's your burn rate, how fast are you going through funds, things like that. There's a website out there called gust.com, where it's a platform often used by angel investors to accept applications. Grant funding. Certainly, as I said, in recent years, there's been a lot of grant information, but for existing businesses. There are some out there for other businesses, but I find that many grants go to institutions or to organizations, not to individuals. There aren't that many grants out there, few if any that I know of, for starting up a business. Sometimes there's ones for certain sectors, like agriculture might have some grant funding. Sometimes there's funds related to low to moderate income, or if I'm creating jobs, there's some have been at times cycles of grants around that. Some are technology related, and again, particularly around those, the timing cycle makes a difference. So you need to check and see what their cycle is. And if I need the money this summer, it might not work because I won't be able to get to it soon enough, and I might have lost my window for this particular project. As I said, we'll send out some forms and some links after the workshop, after this conversation, and I think I'm a little bit over, so I will jump off, quit sharing my screen, listen to any questions from those of you who are still on, or also from the Q&A. So let me get rid of my screen and jump into some questions.
Awesome. Well, thank you, Anne. This is a lot of information. We know that. So we are open to any questions. Liz is asking if we have any specific advice for nonprofits, but we tend to work with businesses that are outside that sector.
That's correct. I tend to refer folks to Maine Association of Nonprofits as a resource within the state of Maine. But yes, that's true that nonprofits are are a bit of a different beast in there. But some of the business things apply. It's about fit. Does it work for you, for your type of business, your nonprofit model? Are you in the right sector? Some of those rules will still apply. It's still true that for grants for a nonprofit, she who's got the money makes the rules. You still need to know if you're eligible, given what their interests are, if you're a fit. And I realize I jumped off a little too quickly. There's a slide about with contact information. Certainly, you're welcome to reach out to me afterwards. That will be a part of the package Kelsey sends out, but you're welcome to reach out if you've got other questions or things that crop up afterwards. But other questions?
Yeah, and I will definitely send out those follow-up resources and the link to this recording. So if you need to rewind it at all, you can. Our contact information to get set up with a business advisor will be in there, as well as Anne's email directly if you have a follow-up question. Also, you can respond to any email that you have ever gotten from me, which is probably quite a few at this point, and it will end up in the same place, and I can make sure it gets connected to Anne. I don't see any other questions, but feel free to stick those in the chat. I know we did want to hear from all of you what additional topics you would like to hear about in future events. So feel free to put that in the chat right now. There's also a survey at the end of the email that I'll send out, and you can feel free to put your topic suggestions in there. We got a thank you. Someone had to run. We know everyone's tight on time, but we agree. Thank you, Anne, for a great presentation. Thank you to the Carver Library for asking us to cover this, and thank you all for joining us.
And I'll just quickly say, I do see Christina is here. If she has any quick comments from the lender's perspective, feel free to speak up, Christina. Thank you for jumping in.
Yeah, I'm happy to be here. I know that I'm just going to put a plug in, just let you know that I know it's intimidating to talk to a banker. I'm going to tell you that a lot of us aren't intimidating. We're really just local people, just like you. Calling up your local bank, somebody you do deposits with, there are no stupid questions. We literally are here all day long. I'm glad Anne talked about the 5 C's of credit, because every new lender goes through that same exact training. It's the first thing that we learn is that 5 C's of credit. But I'm happy to, help, be assistance. I'll be doing a training talk more specifically about banking and what they specifically look for. We're going to talk about terms that they use, like debt to income, loan to value. There's a lot of different reasons that a bank may approve or deny a loan, and they're not about you personally most of the time. So just don't take it personally. Don't take that denial if you get it as something that's like final, because there's always a way to review it and come back better in 3 months, 6 months, a year. You just have to be willing to kind of make a little bit of effort and some work. But yeah, I'm happy to be here and happy to answer any questions about banking.
Yeah, and we're looking forward to that session with Christina, which is May 26th, which is a Thursday at noon, it looks like. So same time, basically, same bat channel, and we'll be continuing our ongoing conversations around funding, because it's certainly not a one conversation topic. Biz is asking, wondering about how to choose the right bank for your business, which is a great question.
Good question. Christina, you want to jump in? I got a few thoughts, but you can jump in.
Sure. So this really depends on you, and it kind of depends on what your overall goals are. If you're looking for, a lot of money, thinking 250,000 or over, you're going to want to start with your local banks, local to Maine. If you have a credit union, because that's totally fine too. They're really not that different other than the regulations that they're applying by, but credit unions are very relationship based. So if you have somebody who you have a credit union started with and you're looking for a small 10,000 or an equipment loan or a vehicle loan, they're a great resource as well. But I always kind of aim for that, local Maine business bank that's right in your town. They are community focused. So that's kind of usually where I start with.
Yeah, and I agree. And just my observation, nothing against credit unions. I've got a membership there too, but I find that credit unions often aren't as business. They don't do as many business loans. They tend to be focused more, as you said, on the relationship and the consumer loans. That's where I'd go for my car loan, my snowmobile loan. But I tend to find the traditional banks do more with the with business loans, sometimes depending on size, especially as it gets bigger. And sometimes you can even partner, banks can partner together at times too. But a great question. I agree, start local. I quite frankly, in 15 years, I have seldom dealt with some of the bigger national banks. My clients have almost exclusively been going to their local lenders. And just a quick summary is one thing I didn't talk about. There are some other sources of funds out there I didn't even address because quite frankly, I'd say don't go there. And that's the call it up or go to the search engine. I need money fast, but those tend to be highly usurious. The rates can be 20–25%. They'll take it out of your bank account daily. And my observation is that's typically just been, if you're that desperate, then go talk to a business advisor or your lender and try to figure out an alternative or shut the business down, because those seldom I have found lead to a better outcome. So my bias a bit, but.
Yeah, I can only imagine you want someone who's funding you to want you to succeed. So,
and as Christina indicated, you know, banks don't want to lend you into a black hole. They don't want to lend you into a bad situation, and they might see it a little bit differently than you, but they're also more objective. Yes, they're risk averse, but sometimes a no is maybe the best thing you need to hear, and you can then strengthen it and come back.
Yeah, and our business advisors are very good at reviewing and revising business plans that are ever evolving. So if you've never written a business plan, we can help you. If you're halfway through yours, we can help you. If you have scratched several copies and you're on your 15th version, we can help you. So do not feel intimidated by reaching out for help. We only want you to succeed, and we will very gently tell you if you need to switch directions, perhaps, but we really want you to succeed, whatever way that is. So like I said, I will send out all of those resources later this afternoon, including all of our contact information. So if there are future questions, feel free to reach out. But otherwise, I don't see any other questions coming in. So we could probably wrap it up for today. So thank you all so much for joining us. We look forward to seeing at future events. We're getting lots of thank yous in the chat. So yes, so thank you. Also, say thank you to yourself for showing up for your small business today. You've already done the hardest part, which is just showing up. So well done.
Thank you all. Best wishes.
Have a good one, everyone.